Good morning, everyone. Uh, Yesterday, we saw US market declining substantially. Uh, it has wiped off all the gain which was there day before yesterday, and even declined more than that. The key reason believed to be that the online purchasing platforms, various companies in the US declined very sharply. That is on account of mainly some master data figure came which shows that the online sales has declined year on year, whereas offline sales has increased. That has put a lot of pressures on various companies which are there in the online trade. Apart from that, market is believing that the increase in the interest rate by the Fed may not be sufficient to control the inflation, and that may not act enough to cool off the inflations. Even if we see after, though the market is declining very sharply, the oil prices are not coming off. They are still at around $111.5, whereas oil has declined, but not enough to control the inflation. Aluminum was down by around 1.8%, copper by 1.3%, ore by 0.8%, and steel was down by 1.8%. If you take about the Asian market, most of the Asian markets are down between 1.5 to 2.53%, taking clue from the US market. So we will also see similar type of actions in our market as well. I'll request technical team to take up from here.
Yes, thank you. So, good morning, all of you. Looking towards the Asian market, our market is likely to open. Hello, can you hear me? Yeah. Good morning, all of you. Looking towards the Asian markets, I believe that Nifty is likely to open with a gap down or almost by 250 points, which means that the Nifty will get open. Looking towards the market, the view will remain a cautious itself. From the last 2 days, we are emphasizing that the overall view on the market is trades below 17,200 levels. Now, for the today intraday purpose, the first support will be placed at 16,400 level. If it's break that level on the closing basis, likely to witness more selling pressure. The Nifty towards 16,320 to 16,270 levels on the downsides. I believe that the overall view will remain a cautious only, whereas on the upside for today intraday purpose, 16,740 and 16,800 will act as a crucial resistance zone. A small pullbacks rally can be witnessed into the market, but the overall view will remain a cautious itself on the Nifty. Coming towards the Bank Nifty is also facing a very strong resistance of all the important moving averages, and it's failing to maintain a positive closing about 36,000 psychological resistance levels, which gives some sort of a bearish signals. For today intraday purpose, the support is placed at 34,900 levels. Below that level, 34,500 levels can be seen. Whereas on higher side, 35,770, 36,000 will act as a crucial resistance level for the Bank Nifty. Coming towards the Nifty Finance, for today intraday purpose, 15,950 is the first support zone. If it's break that level, then 15,800 levels can be seen on the downside. On the high side, 16,200 and 16,300 levels are the crucial resistance level for the Nifty Finance. Stock specific, we are not suggesting any buy or the sell call pre-market. Let the market settle down at the support levels. Accordingly, we will initiate a buy or the sell call. I think that's it from my end. I request derivative guys to take a call forward.
Yeah, thank you, Swati. Good morning, everyone. So, as per yesterday's derivative data, we are seeing major sell-off coming out from the upper levels. Continuously, we are witnessing that market is not able to sustain on the higher levels, and when pullbacks are coming, we are witnessing up sell-off from that levels. As I mentioned in yesterday's session, that 16,800 below that 16,500 would be the important support. While we are seeing that as per SGX, today Nifty is likely to open around 250 points on the downside. So it would be opening around 16,450 to 480 levels. But while looking at the PCRY, We are seeing, as I mentioned, PCRO yesterday also, that it is trading in oversold zone. So PCRO yesterday closed at 0.73. So if today, in today's session, if Nifty gets open around 16,450 to 480 level, we will witness that PCRO are likely to come around 0.62 to 0.60 level. When a PCR comes at that level, there is a strong chances that the market to likely to get a pullback from that level. So we will see that if today's support, while opening it, today's lows get supported, then if tickets close above 16,500 level, then market is likely to get in the range of 16,500 to 800 level in next week trading session. But if in today's trading session Nifty gets closing below 16,500 level, then the next support for the market would be 16,200 level. So currently view would be cautious for the next week, but current scenario as per the data points, we are witnessing a pullback rally in the second half in the market. That's it from the derivative front. Thank you.
Good morning. As per media reports by Economic Times, there is a possibility that Mahindra Group will demerge its automobile business into 3 separate companies from the other group companies. So the auto business contributes 55% of the total group revenue, and it will involve separating the auto business into electric vehicle, tractor, and passenger vehicle businesses into 3 separate companies. So based on this news, it is positive for M&M. Cholamandalam Investment and Finance result was above expectation. There was provision write back because of improved asset quality. Gross NPA came at 6.8% versus 8.5% in December. And also stage 2 loans fell sharply to 7% from 10.3%. Loan growth was at 14% quarter on quarter, which seems very high, whereas on year it was just 8%. So we expect that going forward, maybe in next few quarters, loan growth will also head towards 18-20% kind of year-on-year growth. So we remain positive on Cholamandalam. Aavas financials result has improved. There has here also there was a provision write back leading to 30% growth in profits. Gross NPA declined sharply to 1% from 1.7%, and also 1+ days past due declined to 4.5% versus 6.5%. So we have seen sharp improvement in Aavas. On the asset quality side, loan growth remains stable at 20% year on year. So we expect stock has also corrected a lot from around 3,300 levels to 2,200 odd levels, and we expect that from here it would take support and it should start gradually moving higher. Aptus Value Housing Finance result has improved. Loan growth has been stable at around 27% here. Gross NPA improved from 1.5% to 1.2%. Also 30 days past due figure which the company discloses, it has come down from 12.3% to 10%. So positive for Aptus. Computer Age Management Services, that is CAMS, result was okay. Revenue and EBITDA both were flat quarter on quarter. We are neutral over here. On the auto side, TVS Motor result was in line with expectation. Revenue and EBITDA both grew by around 4% and margins were stable at 10%. Gross margin was also stable, which means that the company has done well to pass on the increase in raw material costs. On the demand front, the management reiterated that they are seeing green shoots in both rural as well as urban markets, led by improving rural incomes following a good agricultural season and the opening up of the economy. It plans to launch a few models in the electric vehicle, the 2-wheeler and 3-wheeler segments in Q1 itself, and company is also planning to increase the EV capacity to 10,000 units per month. So although in overall company terms it is still small, but company is moving in the right direction, and we are expecting a volume growth of around 10% CAGR over FY23 and 24. So in the near term we are neutral, but long term we are positive. Sona BLW result was in line with expectation. Revenue was flattish year on year. Although if we break down, EV revenues doubled year on year and now forms 29% of total revenue. while the non-EV revenues declined by 14% year-on-year because of supply chain issues. EBITDA grew by 7% year-on-year, and margins were stable at around 24.7%. They have been at this level since a few quarters. Since listing, company has always been expensively valued, as we expected it to grow its profits at around 50% CAGR going forward, driven mainly by growth in electric vehicles. And we were expecting that non-EV business will also grow in a normal manner of single-digit volume growth. But now, because of the supply chain issues and ongoing war in Europe, as well as constraints from China, we are seeing that the non-EV business degrowth is likely to happen in FY23, and that is how accordingly we feel that estimates should come down for FY23 year. That is why we feel that in the near term stock may remain sideways, but long-term thesis remains intact. And as soon as the supply chain issues get sorted out for the auto sector as a whole, company should see a good performance. Thank you.
Good morning, everyone. Happiest Mind has posted improved set of numbers for the quarter, with dollar revenue coming in at 39.9 million versus QOQ of 37.8 million. Higher revenue led to higher profitability to the company. Stock is trading at 55.9 times FY23 EPS. Blue Dart Express has posted above expectation numbers majorly on the margin front. Although revenue came in muted with expectation, however, margins have improved to 25% versus expectation of 20.7%. Stock is trading at a PE of 44.8 times FY23 EPS. Intellect Design Arena has posted declining set of numbers for the quarter. Stock is trading at 21.7 times FY23 EPS. Firstsource has posted above expectation numbers for the quarter. Dollar revenue came in at 205.5 million versus QOQ of 195.4 million. Higher revenue led to higher EBITDA to the company. However, on the margin front, it was a little lower versus expectation. Stock is trading at 13.4 times FY23 EPS. Thank you.
Yeah, good morning. Jindal Stainless Hisar result was okay. Sales volume came at 179,000 ton versus 184,000 ton quarter on quarter. EBITDA per ton came at 30,000 versus quarter on quarter 28,300. Margins came at 14.1% versus 13.6% quarter on quarter. Share is trading at EV by EBITDA 4.8 times on trailing basis. Thank you.
Yeah, apart from this, the other company which has reported results yesterday were Dabur. Dabur has reported result marginally below expectations. The volume growth was around 2% versus expectation of 1.4%. And EBITDA margin also came a bit lower at 18% versus expectation of 19%. So we are seeing that most of the consumer companies are reporting below expected numbers, or their results are showing very less volume growth of 1-2% or even somewhere negative also. That was the expectations before the result also. But what we see that the valuation has corrected substantially now and are at reasonable level. So looking at that, we may not see any great further decline from here, or these stock may act as a defensive stock in poor market. So overall outlook from here is neutral for Dabur, and even Marico also similar type of results were there. They were declining, but again, outlook is neutral from here. Then we had a result of Blue Star. Blue Star came up with very good number in this quarter. The revenue growth was well ahead of expectations at around 2,200 versus expectation of 1,900, and EBITDA margin was stable and in line with expectations. So overall the summer season has helped Blue Star very much. And the same is continuing even in the Q1 also. So outlook also remain comparatively positive. Only thing is valuation as 40 times FY23 earnings looks a bit stretched. So overall outlook will look positive. Then yesterday Tata Consumer had a con call. We had seen that result day before yesterday. But the company has given outlook which is more of a positive in long run. The tea prices remain low, and which has helped Tata Consumer to report better than the other companies' results. And these tea prices, according to them, are likely to remain low. And even the other businesses which they are developing are showing good sign of improvement. And management has indicated that they will be looking for margin expansion and all. So overall outlook from here is positive. Only thing is valuation is cheap for them and is trading at around 55 times FY23 earnings. Then Lakshmi Organic came up with the numbers, and numbers were declining, mainly because of acetic acid and ethyl acetate price decline during the quarter. The prices of these commodities are still low, and as such, the near-term outlook may not show any great turnaround. The key story in this is that they are moving towards more of a fluorocarbon business, and that will be starting in Q3 of FY23, then gradually moving up from there. And market is giving excessive valuation on that account at around 44 times FY23 earnings. The key thing will be to watch is that how that development takes place. And if that turn out positive, then the company will have run away from here. So, but that is wait and watch. That will take some time to get reflected. Meanwhile, the basic business right now is under pressure. Then Blue Dart came up with the numbers, and that was also above expectation. Whereas Voltas, on the other hand, has reported below expected numbers, wherein the sales came lower than expected at around 2,600 versus 2,750, around 100 crore less than what was expected, and even the EBITDA margin was also at around 9.8 versus expectation of 11%. So result was below expectation. DCM Sriram also reported numbers, and they had reported improved set of number mainly on account of chlorovinyl business, that is caustic soda and PVC, whereas the sugar business was more of a stable. They had a lower revenue and comparatively lower margin, similar margin as compared to last year. Other business like fertilizers and seed it's an off season, so nothing so great, but fertilizer also had not shown any great profitability. So overall result was more of a improved set of number. That's all from us. Thank you very much, and have a good day.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.